Welcome to our deep dive into market performance. As of July 31st, 2025, the stock market's been a thrilling ride. The S&P 500 soared 0.92% to 6,421 points, hitting record highs alongside the Nasdaq Composite, fueled by robust Q2 earnings and a U.S.-Japan trade deal. But not all's rosy. The Dow Jones dipped on July 29th, due to stalled U.S. China trade talks. Investors are on edge. With today's Federal Reserve meeting, light economic data releases, and big earnings from Apple and Amazon looming large. What's driving these swings, and where's the market headed? From trade policies to sector trends, we'll unpack the forces shaping Wall Street. Whether you're an investor or just curious, buckle up for a clear, concise look at the market's pulse and what it means for you. Let's dive in and explore the financial landscape. The S&P 500 and Nasdaq have been on a tear, climbing to all-time highs, with the S&P 500 up 0.92% on July 31st. A strong Q2 earnings season and optimism around a U.S.-Japan trade agreement have fueled this rally. However, the Dow Jones stumbled earlier this week as U.S. China trade talks hit a snag, reminding investors of lingering uncertainties. Technical indicators are flashing warnings. The Nasdaq 100's Relative Strength Index, RSI, at 71 suggests overbought conditions, hinting at a potential pause or pullback. The CBOE Volatility Index, VIX, sits at 15.03, relatively calm, but ready to spike if surprises hit. Investors are treading carefully, awaiting today's economic data like PCE prices and employment figures. The market's riding high, but high valuations and trade tensions raise questions about sustainability. Can the bullish momentum hold, or are we due for a breather? Let's dig deeper into the drivers. Earnings season is shaking up the market. On July 30th, United Health Group plunged 7.5%, United Parcel Service dropped 10.6%, and Whirlpool cratered 13% after disappointing results, dragging down sector sentiment. Today, July 31st, all eyes are on tech giants like Apple, Amazon, and Coinbase, whose earnings could either propel the market higher or spark sell-offs. Strong corporate earnings have been a key driver of the S&P 500's rally, but misses from big names show the economy's uneven recovery. Consumer cyclical stocks like Tesla and Chipotle are under scrutiny for lofty valuations, while industrial and financial sectors shine. The mixed earnings picture reflects a resilient yet choppy economic landscape. Investors are watching closely. Will today's reports keep the bullish vibe alive, or will they signal caution? The outcome could set the tone for August's market direction. Trade policies are a major market mover. A recent U.S.-Japan trade deal has boosted optimism, lifting stocks tied to global commerce. A potential U.S.-EU deal with 15% tariffs is also in the works, which could avoid harsher levies and support market sentiment. But the elephant in the room is U.S. China trade talks, which remain stalled, creating uncertainty and occasional sell-offs. Tariffs, or the threat of them, have markets on edge. Though they're less sensitive than earlier this year, investors are also watching currency fluctuations as trade news impacts the dollar. The interplay of these deals and disputes is shaping market dynamics, with potential for both upside and volatility. A resolution could spark a rally, but prolonged tensions might weigh on growth stocks. Trade's a wild card. How it plays out will be key to the market's next move. The Federal Reserve's July meeting is front and center today, July 31st. No rate cut is expected, but there's a 69% chance of a 25 basis point cut in September, per Bloomberg. Fed Chair Jerome Powell's comments will be scrutinized for hints on future policy. Investors are hungry for clarity. Will the Fed stay hawkish or signal easing? Today's economic data, like PCE prices and employment cost index, could sway expectations. Strong data might dampen rate cut hopes, supporting the dollar and pressuring stocks. Weaker data could fuel bullish sentiment by raising cut odds. The Fed's balancing act is critical, as high rates could squeeze growth stocks, while cuts might lift them. Policy uncertainty is keeping markets volatile, and Powell's words could either calm or shake things up. All eyes are on the Fed for the next market cue. Let's zoom in on sectors. Industrial and financial stocks are leading the charge, buoyed by strong earnings and economic resilience. Meanwhile, consumer cyclical stocks like Tesla and Chipotle face headwinds from high valuations, with investors questioning their growth potential. Tech and AI-related stocks remain a hotbed of activity, offering big rewards but also big risks due to overbought signals. The S&P 500's RSI at 76 suggests the broader market may be due for consolidation. Energy and small-cap stocks are gaining attention as undervalued opportunities, while healthcare lags after mixed earnings. Sector rotation is key. Investors are shifting toward value and away from overpriced growth stocks. Understanding these trends can help you navigate the market's ups and downs. Which sectors will shine next? Earnings and economic data hold the clues. Today's economic releases are make or break. Personal consumption expenditure, PCE prices, the Fed's go-to inflation gauge, will signal whether inflation's cooling. The employment cost index and initial jobless claims also dropped today, shedding light on labor market health. Strong data could temper hopes for a September rate cut, bolstering the dollar and potentially pressuring equities, especially growth stocks. Weaker data might spark optimism for monetary easing, lifting market sentiment. These numbers don't just move markets, they shape investor psychology. A surprise in either direction could trigger volatility, with the VIX poised to react. Investors are glued to their screens, as today's data could either stabilize the rally or signal a shift. Stay sharp. These figures are critical to the market's near-term path. The U.S. market doesn't operate in a vacuum. India's Nifty is hovering around 24,850, sensitive to today's FOMC outcome. European markets are upbeat about a potential U.S.-EU trade deal, while Asian markets are mixed due to China's economic slowdown. Currency movements, especially the dollar's strength, are tied to U.S. trade and Fed policies, impacting global assets. A strong U.S. market can lift global sentiment, but shocks, like a trade war escalation, could ripple worldwide. Emerging markets are particularly vulnerable to U.S. policy shifts. Investors need to watch global cues, as interconnectedness amplifies risks and rewards. The U.S. sets the tone, but the world's markets are all part of the same symphony. How will today's events play out globally? What should investors do in this environment? Diversification is your friend. Spread bets across sectors like industrials and financials, which show strength. Tech and AI stocks are tempting but risky due to high valuations, so tread carefully. Keep cash ready for market dips as overbought signals hint at corrections. Today's earnings from Apple and Amazon could be game changers, so stay updated via platforms like Yahoo Finance or 5paisa. Risk management, like setting stop losses, is crucial in this volatile market. Long-term, analysts like JP Morgan see a flat S&P 500 in 2025, targeting 6,000, citing trade and valuation concerns. Consult a financial advisor to tailor your strategy. The market rewards those who stay informed and nimble. Be ready to pivot as new data rolls in. That's our wrap on market performance. The S&P 500's at record highs, but trade tensions, mixed earnings, and Fed policies keep things unpredictable. Today's data and earnings could set August's course. Risks loom. Tariffs and high valuations could spark pullbacks, but opportunities abound in undervalued sectors like energy. Stay informed with tools like Yahoo Finance, and always do your homework. The market's a dynamic beast, full of potential and pitfalls. Thanks for joining us on this journey through Wall Street's twists and turns. Keep your eyes on the data, your strategy sharp, and your portfolio ready for what's next. Until next time, happy investing, and we'll catch you with more market insights soon.